If you've ever been caught on the wrong side of a trade and wondered why price reversed right after you entered, it's not just bad luck, you were likely trapped by a market maker using vector candles. In this video, I'm going to break down what vector candles are, how to identify them, and how market makers use them to bait traders before reversing price. Let's get into it. First off, what are vector candles? Vector candles are high volume candles that signal market maker activity, specifically when they aggressively push price to trap traders. These aren't just regular candles, they show up when there's a sudden spike in volume that far exceeds what's normal. And the type of vector candle tells us a lot about the market maker's intention. Alright, first up we have the green vector candle. So this is a green vector candle. It represents high buy volume. The volume must be 200% or more than the previous candle. And if you see two green vector candles in a row, that means that this second green vector candle still has to have 200% more volume than this candle, which is a lot. So when you see green vector candles preceding each other, that is a lot of volume coming in. One thing to mention is I'm using the TR main indicator. There's multiple indicators you can use for vector candles. This is my preferred choice. Next up we have the blue vector candle. It signals above average buy volume. Volume must rise 150% over the average of the previous 10 candles. So here we have some blue vector candles. And next we have the red vector candle. It represents high sell volume. Volume must be 200% compared to the average of the previous 10 candles before it. And last we have the pink vector candle. Signals above average sell volume, and the volume must rise 150% over the average of the previous 10 candles. Alright, next up we have the stopping volume candle. Typically it has a small body with long wicks, especially in the direction of the current trend. So if I go to the higher time frame, I'm sure I can locate some of them. So we have one here. Notice how it has a small body with a long tail or a long wick. We also have one right here. We have one right here. So when you see these stopping volume candles, they represent an attempt by market maker to absorb liquidity, exhaust momentum, and often signal a potential reversal area. You'll also see this candle appear after a series of vector candles, acting as a pause before the trap is sprung or the reversal starts. So again, we see market maker has sold here, got a red vector candle, and then the move is exhausted here with a stopping volume candle before the reversal starts. Alright, now that you understand what vector candles are, we're going to cover some logic and just break down some of the trading setups that vector candles can bring. So I'm going to get rid of this. Alright, we're going to go down to the 15-minute time frame. Alright, so this is the most recent price action for Bitcoin. Now, we see here that market maker, he brought price up here very aggressively. We've got 1, 2, 3, 4, 5 vector candles in a row. So this is a lot of volume. So the first thing is we have to think, okay, why did this happen? You know, market maker picked this area to execute this move and bring in this volume here for a specific reason. He didn't just randomly decide, hey, let me hit the buy button and pump up Bitcoin, you know, almost 3%. So one of the things I like to look at is the liquidation heat map. So if you watched the previous lesson, you'd already be familiar with the heat map. But if we go over here, you can see that we had about say about 800 million in liquidations right at these levels. So when he made this move, he took out this liquidity that gave this that gave this move more fuel to aggressively occur, and then retail might have jumped in. So when we see these aggressive moves by a market maker, what happens is he pushes price up, and then you see the rest of these candles have normal volume. This is retail trading. So he'll wait to see if retail is going to come in or not, and he'll see what they do. Now, retail, if there is a reason for market maker to go even higher, if retail does the job of maintaining this price, us having us hold it, or having this consolidation turn into support, and if there's reason to come up here, market makers sometimes will come back in again to get us up here. So again, if we go back to the liquidation heat map, you can see we still have an additional, like 700 million worth of liquidations right above us, from 87.7 to 88.25. So yeah, literally like this move right here. Now, there's lots of other reasons that market maker, executes these moves. The main objective for market maker is to, one, maintain balance, and two, get paid. He gets paid by, liquidating over leveraged traders, and then also by exchanges that he works with. So when he wants to maintain balance, he has common targets. Now, these targets can exist from a variety of things. It can be the CME close, CME open. It could be psychological highs or lows for the day or for the week, those different levels. It can be key liquidation zones. It can be a variety of those things. And that will be one of the reasons he does strong moves like this. Maybe he's trying to push us out of a specific range. Maybe he's trying to have us break out. Also could be a setup or a trap. He's trying to take this liquidity that we took here, get retail to get long here, FOMO in, only to then bring it back down to where he really wants to have the price ideally go. Now, you also have to understand that when market maker is opening up these longs, he's also opening up shorts and hedging to cover his position. So when he sees price about to roll over, or he sees that retail is not committing to this move, so he makes this move, right? He wants to see retail start coming in, or FOMO, because if he doesn't, and the move is weak and retail's not there to support the move, he only has a certain amount of time to pay himself back on these positions, because again, he's hedging, he's covering his longs with shorts, so he has to pay himself. So if retail doesn't come in, then that's when you see price roll over pretty quick. It's because market maker is exiting. This is what manipulation looks like. So typically people will see these BART patterns, right? So you have BART here. If you're familiar with that, you might have heard, hey, it looks like a BART sentiment, or a BART. Well, it's because we get the aggressive move up by market maker, and then you get this consolidation at the top of retail not coming in, and then we drop right back down. So that's why, if you ever heard of a BART, or even if you know what a BART is, but you don't know why they happen so often, this is literally it. So let's say by the end of today, retail doesn't come in. So this move happened right during Asia Open, the Asian session for Monday. And we're going to have New York open here soon. So let's say New York opens up and they don't want to commit. Well, market maker is going to pay himself on these positions, and we're going to come right back down. And then we'll get a BART. Now, I want to go and show you some reversals because those stopping volume candles really do come into play quite often. So let's locate some of those. All right, here we have a perfect example. So this is on the 30-minute. So market maker came in, he started bringing in a lot of selling volume. You know, here a lot of traders might get trapped. They may try to start shorting here. We get this stopping volume candle, we get the reversal. So all the people that went short here are now underwater. They're getting stopped out, or they're eventually getting liquidated. It's a perfect example of a stopping volume candle. Also, we get liquidity sweeps sometimes with stopping volume candles. So let's just say, at these price levels, there was a lot of liquidations, right? Market maker brought price up as we came up and swept that liquidity or these price levels. We then came right back down and market maker brought price down. So he took that liquidity, and then you had FOMO traders who came in here and they opened up their longs only to get on the wrong, pretty much only to get trapped by market maker. And the market maker brought us right back down. And we have a stopping volume candle, and then we reverse. Another thing to note with vector candles is you'll see them on all time frames, but typically on a larger time frame, remember I told you market maker eventually has to pay himself back. He has to close these trades eventually. He doesn't want to lose money, so he's gonna pay himself back. The vector candles that you see on lower time frames usually recover quicker, or they retrace quicker, meaning price diverts back to where the initial moves happened for the vector candles. So here we saw market maker come in, you know, he probably tested retail, and then retail didn't come in, and then he paid himself back, so he came right back. So this move happened in about 30 minutes, and then a couple hours later we came back. So, you know, that happens quite often where we get these vector candles on the lower time frames, and then market maker pays himself back. Here's another example. Opens up here, boom, pays himself back. Opens up more of these to pay himself back, and then he pays himself back over here. On the larger time frames, you can have candles that stay open for quite some time. So, okay, here's a good example. So I'm going to label out this zone. I'm going to do this vector candle up here. We're going to draw it all the way out to today. All right, so this was a stopping volume candle. You see how long the wick is and how small the body is. So market maker stopped volume, triggered the reversal, and then he didn't have to do anything more because retail came in and they panicked or sold. You don't see any more vector candles, so this is all retail. Now, he wants to eventually see price come back up here so he can close these positions and pay himself back. So we don't see that happen. This was Tuesday on the 15th. So he doesn't see the opportunity to pay himself back until over here on the 20th. Now, that's another thing. So remember, we're looking at the reason that this move might have been done. So we had these liquidation levels here. You've got more liquidity also sitting up here. And then also he wanted to pay himself back from this vector back here. You know, he might have seen price. He might have seen a situation where price was going to, he thought maybe, you know, we're going to come down here. Well, he might have not wanted to wait to get paid for that previous vector, and that could have also played a role into him making this move, you know, in conjunction with the liquidation levels and, you know, a variety of other things. So there's that to take note of for vector candles. Okay, so on the 4-hour, we see a huge vector candle over here. I'm going to draw this out. All right, so here's another example. All right, so when market maker brought in this sell volume here, he got to pay himself back on this candle up to about here. You know, as price is balancing again or rebalancing. But then, you know, he drops his lower. He literally paints this W right here. You know, you see that W. It's another thing market maker does with these vector candles. You know, he helps paint the chart. So literally we have a perfect W here. So yeah, this is something that happens, you know, market makers will manipulate price through the chart to try to get retail to follow his, to make price go the direction that he wants it to. You look at all these vector candles in this W. All right, so sticking back with this vector candle covering this up here. So as we get over here, now we're up to about, he's paid himself back about this much of this vector candle. And then over here, you know, this much, but he doesn't get to pay himself back until literally, yeah, the 20th. So this is over here on the 2nd. So this is almost an entire month that this vector candle has taken to recover. We still haven't even recovered all of it yet. You know, we still have a little bit. But this is something to keep in mind. So when you see vector candles, don't just automatically assume that, hey, we're going to recover this candle right away. Because sometimes they can take a while to recover. But all of them we eventually recover. Not always, you know, sometimes when you go on the daily, the weekly, there's some vector candles that get left behind, which means market maker's losing money. But, you know, he doesn't like to lose money, and he rarely does. So you may see vector candles get left behind at the beginning or end of a bull or bear market, but those are really the only times. It's pretty rare, and it's only on the higher time frames. All right. Next, I want to cover a trade setup example I covered in the previous lesson. This is for lesson 3 over the liquidation heat map. So we are going to bring up the Ethereum chart. I noticed I did not have my camera on in that last segment, but it's okay. So here we have Ethereum. I'm going to find that example that I covered. Oh yeah, here it is. So yeah, this is exactly what happened. So I'm going to replay this move back. So this was a trade setup that I saw I saw we had a lot of momentum. We were coming off of this trend line as well. We had this trend line that was formed off of this curve line. We had a few touch points here. And then, like I said, we had some momentum. We're bouncing off of, I think it was one of the key moving averages, and we were right near our psychological low. So there's like just a few things that I liked, but I wasn't able to enter the trade. Also, I saw, look, market maker here brought us down. We had a stopping volume candle. There was like a lot of things, but this just played out way too fast. I wasn't able to jump in time, but it did exactly what, oh, we have a spider. We did exactly what I thought we would. So I was expecting, my target was about 1620. I was expecting market maker to make a move and try to take this liquidity. At the time on the heat map for Ethereum, this was almost like 30 hours ago. So, oh yeah, we can still see it right here. So we had about, I think it was like, yeah, about 300 million or so in liquidations. And so yeah, I thought he was gonna go for that, and that's exactly what he ended up doing. We can see it right here. So I'm gonna go to the 1 minute. It's gonna give a better view. Okay, yeah. So again, I covered liquidity and the heat map also in the previous lesson, and I broke down that. So all these red lines you see right here are people that have 100x short leverage trades open, and the purple are 50x. So I saw a large amount of these, and yeah, I thought we were going to try to attack him where market maker was. So we're going to play this out. Okay, we can already see market maker starting to make the move. He comes in just with a little bit of volume, wants to test it to see if retail wants to jump in. Retail starts jumping in. He comes in again. Boom, boom. He comes in pretty big right there. You don't typically see, price action like that play out. So, if you didn't know what vector candles were, and you saw this move happen like that, you might have thought it was a random event, but when you know what's kind of going on behind the scenes, you know that the intent is to take that liquidity. The intent is to punish these 100x leverage traders that are trading that are over leveraging on these exchanges where you can open up literally like 200x, 300x positions. We're going to go back over here. Yeah, so this was the move. We ended up taking that liquidity, and then we had that stopping volume candle, and then we came back into this range. This at the time was a psychological high and low, and we stayed in there, bounced around. Another thing I want to show you how I use this tool, these vector candles, that helps me a bit. I'm going to show you right here. So go on the 1 minute again. All right, so for this trade, it's set up, right? I see these sell walls right here. That's what these supply levels are. They're sell walls. So people that have got sells there trying to protect, their leverage trades or whatever, trying to just suppress price from going up for it to go down eventually. So we see market maker come in. So right, I'm in this trade, right? And let's say I see him come in, right? And then I'm like, all right, at this point in time, when I see him coming in, I know that eventually he's going to bring price back down to these levels to pay himself sooner or later. We're on the 1 minute too, so keep that in mind. So, my target is 1620 up here near the top of these, the last of these liquidations. So at this point, when I see a big aggressive move like this, and I know it's market maker, and I see we have the stopping volume candle, like literally when this candle ends like that, this is a very big stopping volume candle. I know that it's likely that the rest of this candle is going to get retraced or recover, it's possible that, yeah, we could like recover it and then maybe go higher later, but that's going to take a lot of time to play out. And I'm a scalper, so I'm just trying to get the meat of the move. I'm in and out. So when I see the stopping line candle, I'm like, okay, I'm out. I'm not going to wait and hold on to this trade to hope for, to see higher prices. Whereas if you're not familiar with these vector candles and the intent behind market maker and these liquidations, you might see this move and think, oh, wow, look, like we just had this big candle. Maybe now we're going to go to the moon, we're going to go a lot higher. That's that's something sometimes that does happen. We get a breakout and then we get more volume that comes in and we push higher. But once you get familiar with these vector candles and your liquidations and stuff, you'll tell yourself with conviction if you think price is likely to continue to rise and push higher, or retrace or roll over and go lower, with these different types of vector candles. So this is a perfect example of how to use vector candles for trade setups and also for figuring out when to take profit and if you want to continue to stay in a trade. I'm going to break this down one more time, this setup, because I really want you to understand it. Once you understand these vector candles, I'm telling you, this is going to help you with keeping your profits and maximizing your take profit targets. So, we see this move. Why did the market maker do this? We know he wanted the liquidity, but, it's control. They don't want to just rely on one direction. They need both sides to manage risk. So they need to create the liquidity. So by driving price up with longs, they're attracting buyers. So this whole move, right here, he might not have got you. You're saying, okay, I see it going up. I'm going to wait, I'm going to wait for it to come back down here or so. But then he comes in here and you're like, oh, shoot, wait. And then he comes up here. And, average retail trader is like, man, this is looking pretty good. Like most retail traders have already jumped in this move. And then he gets this final push. And this is where the meat of the trap happens. So a lot of people, this attracts a lot of buyers. They come in here with their longs. And then what happens is they short into these buyers. So that's what creates the stopping volume candle. So as everybody, like market maker, he brings in the volume, he pushes it up, and as everybody is FOMOing into this move and getting trapped, market makers coming in and boom, opening up shorts on them, and that's why the volume is stopped so quickly. It's market maker. He's stopping the volume. He's bringing it in, giving it one more push, and then once everybody joins in, he goes, no, we're turning around. Boom, brings it back down. By opening up short positions. And then as we go back down, he's paying himself. That's the trap setup. Once enough traders are long, they reverse the market. The sell-off liquidates retail longs, and they profit on their short hedge. So these people that come up here, high leverage too, price comes down, they get liquidated, exchange wins. As market maker is bringing price up here, he was opening up shorts. So that's also helping price come down, and it's helping market maker pay himself on these vector candles. So yeah, That's they're making money two ways there. I'm not trying to be a whale and compete with market maker, because when market maker's not in control, that means that whales are in control. It's pretty much the way it works. When market maker's not in control, whales are in control. Or what happens sometimes is, market maker will push price up, FOMO will start, or not even that. Let's just say this isn't market maker. He doesn't create that price action. We just get a breakout, and maybe Trump tweets something and we go crazy, right? We start pumping and everybody's FOMOing. Market maker doesn't want us to get too far away from, his key areas. Usually, like, say for example, around the CME opener close. So let's say price gets away. Eventually, when the retail movement or FOMO starts dying off or gets weaker, market maker is going to step in and help push us down, bring us back to wherever those levels are, the daily open or close, or our psychological low or high. That's how it works out. He does that because he's trying to keep balance in the chart. So trading with these vector candles and trading with the market maker plays out well pretty often. There's a lot of other patterns and setups I'm going to be covering in future lessons. But that pretty much covers everything for vector candles. I think this is a pretty solid introduction for a beginner to intermediate introduction. So I hope you learned something that you didn't know about before, because these vector candles were one of the key things I was missing to really bring my whole entire trading strategy together to where I started seeing consistency. Before, I would see these moves and I would know price is being manipulated right now, and I know we just took these liquidations, but I didn't know to figure out if we were going to continue or roll over. And now that I'm factoring in these vector candles, it just helps that much more in figuring that out. All right, guys. Also, if you notice at the top of this video, it says I trade live on Femex. I'm going to be trading live on Femex here on YouTube. So tune in, stay locked in, subscribe, hit that bell notification button. And that way, whenever I go live, you'll be notified. Stay tuned. I'm releasing more videos to this trading course. Thanks.